Hello ladies and gentlemen, welcome to your Hawkeye Traders Wednesday on the web session. My name is Mike Smith and delighted that you could make it, invest some of your time today or this evening or this morning, wherever you are on the planet, or even this afternoon if you're in the UK. So what we're about today really is to give you some information to help you along the way in terms of your trading. Obviously we're going to make reference to Hawkeye as we go, and I'm going to ask a couple of poll questions as we go. One thing I want to just sort of raise, we've had last week was a bit of a disaster in terms of reception. Essentially, we had all sorts of connection problems, and so we've chosen a different venue today, and I trust that we get we get a reasonable session going forward. So bear with me if sometimes it perhaps fades out a little bit as I'm changing slides or doing extra things. We are pushing bandwidth pretty significantly here. So yeah, let's give it a go and see what happens. As I said, this is your session, it's not mine. So I'm here to do the best I can to answer the questions that I can. It would be really useful for me to know a couple of things before we start, if that's okay. So I'm going to launch a couple of polls just to find out a little bit more about you guys. So I'm just launching the first one now. So if you can tick the markets that you trade, that would be great to know. Okay, that's over 60-70% of you voted. That's fantastic, guys. That's really useful. All right, we've got right across the board. Options, forex, futures, equities, commodities, all around. We're on the 20 to 30% mark. Forex seems to be the most popular, but that's great because what we're going to talk about primarily today is really goes across vehicles, which is important. The other thing I need to know is, are you using Hawkeye at the moment or not? And either way is good. Again, what I'm going to talk about today is really relevant whether you're using Hawkeye or not, and also we can reference, as well as showcasing Hawkeye, we'll obviously talk about using proprietary indicators, what we'll talk about. So that's great. Again, thanks guys. I really appreciate your participation. With 75% of you voting, I couldn't ask for more than that, so I really appreciate it. And again, we've got a fair range there of people who are using Hawkeye and not. So excuse me if I just explain as we go some of the things that I'm trying to show you. Okay, perfect. Okay, there's already a few questions come through. That's great, guys. And what we'll do is we'll stop at various points. It is almost a clinic session, if you like, for want of a better term. So more than happy to help as I can. Anything that I need to go away and find out, or if we don't get a chance to answer all the questions that are asked, then I'll commit to following through and dropping you a little email. Just a little bit about me. I know I'm probably not very familiar to many of you, unless you're in the options world. 20 years a trader, and 10 years of that I've been a consultant, coach and teacher. So invariably I've come across all the problems, not just and challenges, not just from my own personal trading, but also vicariously through working with others. So much of what I talk about when I'm on sessions like this is really based on a heap of experiences from an awful lot of people. So there's very rarely a problem that I hear that someone's having that I haven't come across before. So please use me as you see fit. I've worked with Hawkeye traders for a little over 2 years now. I met Nigel at the Australian Technical Analysis Association conference over here in Perth, where I now live, though it's not as though you may have detected from the accent that I'm from the UK originally. Being a teacher by trade and in the dim and distant past, it feels like now, I'm passionate about seeing other people get results. That's why I do this. It's great to offer some of my experiences and the experiences of those I've worked with to try and get you in a place where you feel a little more confident about your trading, you're getting better results. Just an invite, if you want to pop me a line at any stage, then please do so at mike@hawkeyeoptions.com. In terms of what I trade, you've obviously picked up that my favoured vehicle is options. I like the flexibility of being able to trade 3 market directions, up, down, sideways, and pick a strategy according to market conditions. But I do trade Forex, probably not quite as much as I used to, but and obviously have an interest in equities, as most of the options decision making that people see in Hawkeye Options is based on what's happening to the underlying equity. For those of you less familiar with Hawkeye uses in essence volume spread analysis as its basis. If you haven't downloaded The Volume Secret, go to hawkeyetraders.com and download that book. It's a fantastic book that Nigel wrote that just explains the approach. Essentially, the reason why volume spread analysis, now I must admit I was skeptical when I first came across Hawkeye. I thought, oh, look, here's another set of indicators with lots of flashing colours and lights and stuff, and all looks very lovely, but is it going to make a difference to my trading? But not having used volume spread analysis before, became hooked pretty quickly when I saw not just the results from entering trades that were at high probability of going the direction I wanted, but also keeping out of those that perhaps I was previously would have got into, which weren't high probability. Additionally, and what I'm going to talk about today really is exits. I would suggest that probably 75% of the people that I've coached on a one-on-one basis have mastered entries. They are quite happy with their and follow through on their trading system relating to entry. But really, it's all entry is it's a method by which we're trying to stack the odds in our favor of something going in our direction. So it's a high probability trades that we're looking for. Really, it's what happens next which determines whether you're successful or not. And one of the reasons I'm going to talk a little bit more about exits today than entries. The way the session is going to run, I'll just talk a little bit about the market, generally the equities market as a whole, and its relationship to other vehicles. But also then we'll go into exits, and I've made sure that what I'm referencing is relevant to every vehicle and every time frame, because that's important to make sure that, or to make sure as much as we can that we give all of you something to walk away with. Just out of interest, just pop a few lines down. The idea of exits being a challenge to many, is that something that you feel as well? Just type in yes, no, or mixed into the questions box. That would be useful to know, of course, from my point of view. As we move on to the next slide, I'll just have a quick look. Yeah, that seems to be... oh yes, yeah. For those of you that have contributed, that seems to resonate a little bit. So let's kick off by looking at the S&P 500, and just to give you a little bit of additional info about Hawkeye. You'll see here, Hawkeye. This is a Hawkeye trend, and he's either in uptrend, signified by green, downtrend signified by red, or in congestion, which is signified by white dots. You'll also see, although it's less clear than it would be on another chart, it just shows you whether it's buying, selling, or neutral volume. With these lines, if it's an equity or a forex pair or a futures, commodity futures, then you'll see the actual volume there. And the bottom is really, the heat map is an indication of the strength of trend. So really, if we're looking, the idea of this is that if we can, that really the only two, or the only indicator that is really leading is volume. Volume seems to change prior to a trend changing, and you will often see that happening. And I'll show you further examples of that as we go through the session today. So that's why volume and price are the two things that we look at most of all. The other thing is that we tend to look across multiple time frames when we're making decisions for entry, and the fastest time frame for exit. So if you're trading Forex on a 60, 120, 240 charts as your three time frames, would use all three in alignment to give us that higher probability entry, and we would use the 60-minute for an exit. Likewise with any of the other vehicles, be it minutes, days, and the ratio tends to be 1:4, which is based on some Gann work that many of you will be familiar with. Anyway, let's have a look at the SPY, and really, unless you've been living under a rock, you'll know that there's been we sort of hit correction territory this week, and we've got the potential for a V-shaped bounce. I actually put something out to members who subscribed to the free video service yesterday, suggesting a potential V-shaped bounce. And really, we want to see it trading over 1965. If you're in an aggressive mood, and 1980 on the S&P 500 to have that confirmed. So we're still in fragile territory, undoubtedly, and of course we've been in downtrend for the last three sessions. So really that's where we're at, and not surprisingly we've tested 1900, which we're here in October, and then so we're really retesting that level. So once we sort of started seeing the selling, then it wasn't surprising that it actually came down to that level. And so if we look at the VIX, which is the other thing we look at quite regularly, an interesting, a couple of things that are interesting about this chart. First of all, the VIX is still in uptrend. Now, for those of you, again, less familiar with what the VIX is all about, it measures implied volatility on options traded on the CBOE, and we tend to see that if there is market anxiety, the VIX tends to rise. If the market's pretty calm about things, then the VIX tends to drop. And really, that break of 20 we saw was pretty. Really, that was an additional sign that we're heading downwards. You'll see it went into uptrend today. Today that the S&P 500 went into downtrend. Interestingly, you'll see also here that we've got this purple bar. I'll explain that in a bit more detail later on. This is called a Hawkeye wide bar, and it's not really surprising that it didn't top that. And again, this is consistent with what we would expect to see with a reversal. If we look back at October again, we have the VIX rising above that 20 level. Right up to 34 on one session, which is particularly brutal. If we had more of this chart, we'd see a double top type of formation, and we so at this stage, again, for those of you interested in options, I know a lot of people like weekly options, but we're in almost ideal territory if we do get another move upwards today, which it certainly looks as though we might. Looking at the futures before we started, then it's almost the ideal situation for short-term credit spreads, with volatility being high but dropping. So just take note of that for those of you who know how to trade that. Now, what I'm going to talk a little bit about is using the ATR for exit decision making. And this is relevant to any vehicle and any time frame. And we can use the ATR as a trail stop, a profit target, or a standard initial stop. So what I'm going to do is I'm going to show you, Hawkeye makes it slightly easier, but there's nothing stopping you using a standard ATR to and doing the maths for yourself. But Hawkeye actually does have ATR levels, which I'll show you right now. But this is a pretty robust way of making those decisions that perhaps are sometimes a little difficult. So if we just have a look at a Hawkeye channel, just again, for those of you who are less familiar, what I'll do is I'll explain what Hawkeye is showing us as we move through. But just a couple of rules. We tend to use a 1.5 ATR stop as a default, and the way we work it is as the underlying price of whatever asset that we're looking at moves through another ATR level, and we move the stop up accordingly. So if we entered a position, obviously at 0 ATR when we enter it, we'd have a stop went to a long position, we'd have a stop at 1.5 ATR below our entry, and then we'd have levels at 1, 2, 3, 4, and so on and so forth above, and as it crossed 2, we'd move the stop up to 1, as it crossed 3, we'd move the stop up to 2, etc., etc. As a standard, we would tend to set a profit target at 3 ATR unless there's another technical reason not to, and it may also differ depending on the market circumstances. If you've got a particularly choppy market in whatever vehicle you're trading or time frame you're trading, then we may choose to just rip 2 ATR off the table, but obviously that's predetermined before you get into a trade. So having covered the rules, let's look at something that might be of interest. So here's an NVIDIA chart, and there's a couple of reasons I've put this up. So I'm going to show you a trade from when we're in uptrend, and I'm going to show you a trade right in the right now and how that might work. So what we've got, again, just to reinforce what you've seen on Hawkeye. So we've got these trend dots, which can be green as uptrend, white if in congestion, red if in downtrend. We've got that combined with the volume really determines our decision making. We can also use these yellow dots, pivot highs and pivot lows, which I use in my decision making. So if we look here, and this is a great example of what we often see, you'll see here that we had red volume, so selling volume coming in when it was still in congestion prior to the downtrend, so we put it on our radar then. We had a really mixed picture at this stage when it was in congestion, and the wide bars we'll talk about later on. But here again, we're still in congestion, we're in this, but you'll see the green volumes come in. We're a little unsure around this range, and it was on this bar here that we liked the entry. We had a green trend, we had a break of the pivot highs, and we had green buying volume as well. The weekly was in confirmation. Just to let you know what I use for short-term options trading. So this would be short-term credit spreads or directional trades. I would use a one day, 2 day, 1 week as the 3 time frames. If it was a longer-term equities trade or a longer-term options trade, and likewise, if you're trading other vehicles in the long term, then 1 day, 1 week, 1 month often works. So, so as a general rule, that's what we'd use for equities and options. For FX and for futures, we tend to the second time frame tends to be double that of the first, and then the third time frame double again. So almost a 1-to-4 ratio, which so if we're trading a 60-minute chart as our fastest, we'll do a 120 and a 240. If we're choosing to do a 120 chart, it will be a 120-minute 240 480. Next week I'm going to talk a little bit about tick charts and how we use Hawkeye to determine the 3 time frames we'll look at, which is really powerful if you're trading FX. Anyway, back to NVIDIA. So we see recently, of course, we'd hit, we saw the selling volume coming in, a break of those pivot lows. This is a wide bar. We wouldn't have entered on this trade unless we're entering a credit spread, which some of you may have heard me talk about before. So we may put a credit spread there, but if we're trading the equity short or a put option, then really we would have to wait until the next bar where we get confirmation that it's broken the bottom of the wide bar, which is one of the wide bar rules. we get red trend here, and we've had red, got red heat map, and we had red on the two previous bars there. So that potentially could have been our entry. So if we were to use ATR on those two major points, this point here that we talked about and this point here that we've just talked about, this is what it may look like. What the ATR does, you click on the ATR levels, but as I said, you can work this out manually if you choose to, if you've not got Hawkeye yet. So ATR 0 is of course our entry, and it's the entry on it's the close price on the bar that we've entered on. One of the reasons that we usually enter in the last hour is obviously the bar is nearly, or whatever time frame you're trading, we tend to enter towards the back end of the bar because the bar is fully formed. So if you're trading a 15-minute, let's say a 15-minute bar on Forex, it would tend to wait until the last 5 minutes before, or even the last 2 minutes before we actually entered on that specific bar, because the bar is there almost completely formed and we know that it's ticked off on our entry criteria. So in this case, here's the bar we entered on, and you'll see the dot there. And then what Hawkeye does for us, which is sort of makes life a bit easier, is it takes our 1.5 ATR to the downside, and then we see that the ATR here must have been 74. No. Let's try that again. Must have been 52. No. So what we've got is we've got equal increments as the ATR goes up based on what the ATR was when we entered. So as the underlying share moved up, it took a day or two to sort of start getting moving, but as the underlying share went up, we could have taken, and you see how there was a pause at 3 ATR there. But let's say we're going to stay in this. So once it had beaten 4 ATR, we'd then trail our stop up to 3 ATR, so close below that, or an intraday touch of 2 ATR. Once it had hit 6, we're then looking at a close below 5 ATR or an intraday touch of 4, so we're still in this right the way through here. Once it hit 7 ATR, then we're looking at a close below 6 or intraday touch of 5, and we actually got up to here and it was triggered, a stop was triggered here. So essentially we're using the ATR there as a trail stop, as well as having our initial stop in place. So really as soon as it had got to as soon as it started moving up the levels, and would start to move from stop to 0, from 0 to 1, from 1 to 2, and so on and so forth. And so that's certainly in my experience, it's proven to be quite successful, and people who have been on the Hawkeye options have seen us use Hawkeye levels occasionally. There are other stops we can use longer term. This is the Hawkeye again. Whoops, sorry. Just to explain some of the other stops that we can use. This cross is the Hawkeye stop, and the line is the Hawkeye crash barrier. So in this case, what would have happened would be this wouldn't have actually, we would still be in this trade. We tend to use this for equities. We would still be in this trade right up until this point where we got an intraday break of the crash barrier. It actually broke the Hawkeye stop on the crash barrier. So generally the rule is that we would sort of, it's either a close below the Hawkeye stop, so that's where we would set our level as a conditional order if we weren't watching it live, or it's any day touch of that crash barrier. So that would have been a successful trade. Now we would have, this is an earnings report, so even if we weren't out here, we probably would have taken this off the table in light of the profit we've made prior to earnings. And then we could look to re-enter, and we'd re-enter. Let's talk about the wide bar for a moment. So the wide bar is a particular period of time relating to the bar of increased volatility. So you'll see that range is far wider than it would normally be. Often, when I did the session on wide bars and how we might use that for credit spreads with options trading, usually it's above 2 ATR if we're using if we're using just a fairly rough measure to do the same job. But the rule of the game is that we don't enter a long position unless it's broken the top of that wide bar. So if we hadn't entered here, if we decided not to run the gauntlet, sorry, move on again. If we decided not to run the gauntlet of earnings, then we would have waited until it had broken the top of that wide bar, which would have been this bar here, and but of course we would have had green trend there and green heat map, so we could have taken advantage of this, and again probably been out at around about the same stage. If we're trading options or some, we tend to use the trend dots as the close below the trend dots. So we would have entered here and probably got stopped out at around about just a few cents below, keeping that exit small. It may be an old market cliche to keep your exit small, but it actually sort of works. So that's if we're using the ATR going long, that's how we would sort of work it. If we're looking to go short, and of course there was an opportunity a couple of days ago potentially, and I've sort of zoomed into this a little bit so you can see it a bit better. So we potentially could have entered on this bar here, but let's say it wasn't red trend there, it wasn't showing a red trend dot, so it would be this bar we'd enter on. So there's our ATR. You can see how that ATR 0 is the close price on that particular bar. And so our initial stop, if we've gone short on this trade, would be sitting at 30.59, which it actually tested intraday. We would tend to put our stops at if we're not watching it live at again a last hour. More often than not, it would be my personal preference rather than an anytime stop if we're using ATR, particularly if it's the initial stop. So there's every chance that this would be, if we'd entered this trade, this would be triggered. Interestingly, if we'd looked at a weekly chart, NVIDIA wouldn't have been in downtrend, it would still be in congestion, so we possibly wouldn't have entered this anyway. But even if we had, what we've got there is an entry at around about 29.63, an exit at around about 30.59. It's not a rip the shirt off your back. Now if this does bounce hard, then we could see it pretty quickly back up to $32 without a worry. And then it starts to get into territory which may hurt. So this idea of making sure that your average win is far greater than your average loss, and again, those of you who've heard me talk before, we actually looked at 55 trades which generated 250% return that we traded last year, and looked at the average win versus the average loss of those, and it was 64% with the average win, 21% was the average loss. So we've got a 3-to-1 average win versus average loss ratio, and if you need any more evidence that keeping your losses small, let your profits run is a good idea, then that was a pretty good example. And that was with a 50-50 win-loss ratio. So it's not the win-loss ratio that is most important. It went directional trading, and this is worth making note of. So it's not the win-loss ratio that's most important. It's the average win versus the average loss. Of course, we work hard in improving our win-loss ratio, but it's less important than that other factor. Okay, so so that's, if you like, an example from live now, and let's just market's about to open, so we'll just have a quick look at the market when it opens and just see where it's actually at. But in the meantime, just before I came on air, and we'll have a look at the ES live in a moment, just to show that we can use exactly the same system. Here's the ES live. The futures contract expiring March 16. So if we like the idea, we see red volume here, though it's not big. This was taken at about an hour and a half ago. Again, I'll say we'll have a look at that. So we have our stop on the ES at around about 1940.23 with an entry at 1934.75. Oops. So that's the way we would have set this trade up, potentially with our ATR levels. Let's just have a quick look at what it's actually doing now. And if you just bear with me, this is where it starts to get potentially a bit. I'm going to have to reload that. One second, bear with me. So there we go. So you see quite clearly there that this was our bar of entry. Just get rid of those dots. So we would have been quite easily stopped out at that level. At the 1940.23. Be interesting to see where it sort of moves from here. But if we'd not done this, if we'd not used the ATR levels and used the Hawkeye stop, we would have been taken out at 1944.25. So again, there's a live example to show you. There we go. That's clearer. Again, we would be if we were trading 3 time frames, it would be 15-minute, 30-minute, 60-minute on the ES. So if we flick to a 30-minute chart, we see that it actually never went into downtrend on the 30-minute, so we wouldn't have actually entered that. But again, it was just for illustration purposes to show you how we may use the ATR if we're doing that. So we should get some volume and some movement coming in pretty soon with the market just opening now. So we've started to the upside. Not surprisingly, we're about 0.35 up, and if we look at that Nvidia trade, they're 19 up, so it still would be yep, trading at 30.35. Okay, so that's really sort of how we can use the ATR. Now I'm going to just flick back to the presentation rather than the live chart. Okay, so there's just that ES chart that I put up before. Okay, so you'll see how that's a phenomenally useful tool just to have it visually like that. But as I said, obviously, if you haven't got Hawkeye, you can invest the time. If you like that as a system to test, then you can invest the time just in working out what the ATR is on as you enter on that buy that you enter it in, and work out your levels from there. Oh, for sure, yeah. Look, I'll just give you the rules again. Just come back. Well, there we go. So we're using 1.5 ATR as an initial stop. And then as the price moves to another ATR level, then we move the stop either upwards or downwards, depending on whether we're going long or short. And if there's a close below the one below, then I would tend to close it out. If there's an intraday touch of 2 below, then again I will close it out. And if we have to set a profit target in most markets, and then we'll make it a 3 ATR level. Just going to tell you one more thing. For those of you who've got Hawkeye, this is a useful tip to know. Okay, so just one more thing on this. If you haven't used the Hawkeye grabber, okay, what that does is it's much like the ATR levels in that you can use a define what levels you want to set those lines at. So one tactic that I've occasionally used and I've seen other people use is should it hit a particular ATR level and it's a market that is that is potentially quite choppy, but we'd like to stay in rather than setting a profit target. What we can do is we can set those levels at let's say 0.5 ATR. So it may be that we have ATR 1 and 2, and then we have 2.5, 3, 3.54. And so what we're doing effectively is we're tightening our trail stop strategy. So that's one thing that you could potentially look at using the Hawkeye grabber. Obviously there you've got to know the ATR that you're working with. Okay, I'm just going to have a quick look at some questions. Okay, so I'll show you how you get them on the chart, Michael. No problem. Is there a particular stock you want to have a look at? Oh, let's use Macy's, maybe, because Macy's were looking interesting. Okay, so here's Macy's. Okay, Macy's moved into uptrend 2 sessions ago. Now, what I'll do is I'll just reverse engineer it for you and then put them on from scratch. Give me a second. Okay. So I'm using Ninja, but it's a similar sort of process whether you're using Ninja or TradeStation or any of the other platforms that the Hawkeye goes on. So we click on indicators. We find Hawkeye. Just find Hawkeye ATR levels. There it is. We double click on that, and that brings it down. Brings it down to the box at the bottom, and then we can click on. What we have to do then is, depending on the color of chart you're using, if you're using a white background chart, it's not a drama. But if we are using black, sorry, we are using a black background, so I'll have to change these blacks to white. Otherwise, we won't be able to see them. Okay, so there we go, and then we're going to apply. Now, when we subsequently click on, let's say we like Macy's as a trade, and we entered on the bar yesterday, so we click, or maybe when it went into uptrend. So there we go. Just move it across so we can see them a bit better. Okay, so once we've got them up there, sometimes if those white squares come on, just click on escape. We can lock the ATR so we don't. There we go. So now we can say, well, look, if we entered here, our initial stops at 37, 32, and we're looking for obviously a move up the levels accordingly. And just for interest sake, let's see what Macy's are doing right now. I'm not sure why that's not showing live data. It might be because of Macy's are down a little bit, down 14. At this stage, so yeah. Okay, so I hope that helps a little bit. Okay, Brian, I would drop, Brian's asked a question about purchasing Hawkeye zones, and after you bought the Hawkeye volume starter package and installing the zones, they've all gone away on the charts. Contact the team, and somebody should get in touch with you, Brian, and help you through that. Which Hawkeye package includes the ATR indicator? Well, look, there's it is part of the professional package. If you haven't got, I don't think it's part of the trader package. Let me just double check for you a second. So here we are. This is it. So it's part of it should be part of the standard package. So the traders or the trader package. It should be in there. So it includes the levels ATR and the grabber, which I talked about as well. So that should be part of. It won't be part of the volume package, but it'll be part of that. Let me just, if you were to buy it, okay, doesn't appear as though you can buy it now. If you're interested, if you haven't got either of those packages and you want to just buy that, I mean, first of all, I would be tempted to upgrade to the standard package, but put me an email through and I'll find out if you can, if there's some way of buying it independently if you've just got the volume package. Yes, the webinar is recorded, Remy, so no worries. I'm glad you made it here. Where would I enter and exit a trade on the ES? Michael, I'm not, I'll have a look at the ES in a minute, Ed, if that works for you, if you can be a little patient just while I work through some of these questions. I'm using TradeStation. How does it work on that, please? Michael, it's the same process in that you're bringing up, I haven't got TradeStation open, I do apologize, but you bring up the list of Hawkeye indicators and you should find it in there, okay. Am I on Aussie time? Yeah, yes I am. I'm on West Australian Aussie time, Bill. Always how to get your arm out of the crux mouth and sticking it in. Very true, Michael, very true. William, please contact the technical support team to talk you through how to load the system properly for yourself. The volume radar dots. What I'll do with that is I'll bring it up and I'll show you. The volume radar dots are really just what I would call a what I would call a bells and whistles function, but it is something to be aware of in terms of your decision making, particularly if you've got perhaps a couple of trades that you're interested in. Let's look at just looking at Macy's there. The volume radar dots are these dots here, and there are three types. We see that less than normal volume usually is indicated by that light blue color. Often that's a sign of market really isn't sure what to do, and we may see a change in trend soon. Yellow, sort of yellow amber color is a higher than normal volume, and really this might be nice confirmation that you're batting on the right wicket. I wouldn't have a problem with just high volume, but you may be cautious with ultra high volume, which is shown by red. Sometimes that may then subsequently lead to a change in trend, or B, that unusually high volume is often related to a particular event, such as earnings. You'll often see volume associated, very high volume associated with wide bars also. Here's a couple of other examples of wide bars. Again, just to make reference to the credit spread example I gave before, if it's in the bottom third of the Y bar, we see it happening, which you can do by changing the true to false on your calculate on last bar close. If you change that to false, you'll see it live, and we'll tend to enter a credit spread above the wide bar when it's in the last third and when it's a clear direction. So either red or green, obviously. Here we've not got it closing in the last third, so we wouldn't enter a credit spread on this, and sure enough it subsequently made its way up to the so we wouldn't have entered that trade. This one would have gone against us, a little bit, we would have entered on this bar here, but we would have got stopped out here. But again, if you've got your rules in your place and you keep those losses small, that's where you're gonna be okay. I hope that helped with your volume radar question. Okay, let's have a look at the ES. So if you just give me a second, I'll bring it up. Okay, so you should see it coming back online. So really, there's no entry on the ES if we're looking at these 3 time frames. Let me just link these boxes together, so if we change it to have a look at something else, it'll do it for us. If we wanted to look at a tighter time frame, we could do. Let's just reload the data. Okay, so looking at this, we're in. Let me just get a trend dot on the latest trend dot on. Just changing it to calculating bar closes are false. Let's get the latest trend dot on only 2 of the time frames. Okay, this is an interesting chart. So we've got a 30, 60, 120 for the ES. Now, if we look at remember, we've got to have green trend and green volume on our fastest time frame with green heat map. We would prefer green volume. We'd prefer green volume on our. We need green volume on our and green trend on our, preferably on our 60-minute, and likewise on the 120-minute. This stage. At this stage, we're in green trend on the 120 and the 60. So in terms of trend, we're doing okay. In terms of volume, we're not. We're okay on the 60-minute and on the fastest time frame, but we're not yet in green trend on the 30-minute chart. So really, I would suggest that once it breaks 1945, that pivot high there, we'll see this change. We'll be out of congestion. We'll in congestion exit, and for those of you conservative, you might wait to 1948. That might be your potential entry on that. By that stage, you may see would need confirmation that that's the case on volume, and obviously we'd like to see some more volume on the longer time frame. So we need green volume on all 3 time frames before we'd enter this in these particular set of time frames. If we wanted to change this to, let's say, to 15, 30, and 60, and go to tighter time frames. There we go. Then really, what we're seeing is we're seeing green volume on all 3 time frames. So from a volume point of view, it's good, but we still need to see uptrend on the fastest time frame, and there's that pivot high again. We need to see it break through that and that trend turn green before we'd enter. If we're then subsequently going to exit, we'd probably use that. I would potentially. It depends on. If it goes into uptrend, we'll see the Hawkeye. Stop and crash barrier turn green and be underneath. So we'd use that as a potential stop, or we could do exactly what we did before and add ATR levels to this. Let's just reload. It's showing downwards because it's still in downtrend. So so on our radar potentially, but no, it's not about options only, Jim. Look, the ATR levels is appropriate on all vehicles. I've mentioned options a couple of times. We're looking at futures here. So hang on a second. I'm not sure whether I've got FX Live on. 1 minute. Let's change this to let's change it to Euro USD. So using exactly the same system. Here's our wide bar. This is interesting. We've got on the 15-minute chart. We've got a break. We've got a wide bar there, so we'll be keen to potentially keen to enter on the strength of this bar. We've got white trend on our second time frame with green volume. That's good, and we've got green volume on our third time frame. So that potentially will be an entry. You see, it's gone into uptrend. So Euro USD on those three time frames would be a potential entry. Now, if we were to add ATR, let's say we're to enter on that. What we're going to do is we're going to do ATR up. We're going to force it upwards. There we go. So here's, if we entered on this bar here, let's just lock it so you can see it. So there it would be our stop at 108.41, and if we set a profit target on it, we might set it at 108 or 1.0880, and that would be our 3 ATR. So that's a nice break on the Euro USD. So there you go, Jim. Hope that makes you happy. And again, is relevant to what we're talking about in terms of our ATR levels. So really, that's what it's about. It's all about we've identified a potential high probability entry, but more importantly, we've got a plan in place that's predetermined for getting out of a trade. So so that's what we can certainly use to keep our loss small if at all. Now, whether you would the only concern with this on this bar would have been that high volume. There's that volume radar again showing exceedingly high volume, which, as I said, is often related to a wide bar. So therefore we've got a potential. We need to wait for confirmation that it's a close above the wide bar for us to move on that. Was there a good trade on the ES last night? Okay, let's have a look. Let's change it back to ES again. So was there a good trade? Not particularly. Let's just change this to 60 minutes, see if there's a good trade on the this. See, we probably would have got chopped out of this. There may have been a potential entry here, but you'll have had to have been really on the ball to do that. Although you would have, if you'd been using the Hawkeye stop, you would still be in this. If you're using the ATR, then it would have got stopped out on this bar here. So looking at the hourly chart overnight, this was all in congestion still, so we wouldn't have entered on this particular set of time frames. But may have been interested. Maybe interested if it breaks that pivot high there again. So not really a good trade overnight, unless you're trading a faster time frame than that. If we're to look at the daily, we're still waiting for our V-shaped bounce. Macy's now moved positive. That's interesting. Dow's just major indices are holding on to slight gains. They're slightly off their high. But we do know Macy's is now up 22, so up a little over 0.5%. After looking a bit shy after entry. So I hope that answers your question. I wouldn't have entered anything on the ES during the session, during the Asian/European session. Okay. So really, the last good trade, on the ES was probably day before yesterday. Let's just change this back to an hourly chart. This is probably the last clear entry. You'll see that would have us interested. We'd have to have a look at the other time frames, but this certainly, you'll see again we've got red volume coming in. It's changed from congestion to downtrend, so we would have quite happily taken this trade down here and would have closed it out around here. Probably on a break of that pivot high would have tightened stop. If we'd used ATR on this and we'd entered on that bar, then there would be our initial stop. Entered on this bar here. So once it had closed here, we would be closing it out if it closed above this level. So we'd probably close it out around, what's that? It's about 1908. Our entry was 1925. Sorry, our entry was 1935. So that would have been a nice trade. But that was probably the last good trade on the ES, unless you were very sharp on this trade here. You could have traded this this little run up here. Let's just say we entered on that bar there. No, it would have been stopped out on that one if we'd used the ATR. Oh no, it would still be in it. Didn't have a close below the stop. So we'll be up here now. So we'll be looking, yeah, we'll be okay on that trade now, even though it bounced around an awful lot. So that was that one. So just before opening, the open yesterday, took a couple of hours before the open yesterday, might have been a trade we would have taken on the ES, depending on the time frames. We'd have to look at the 120 and the 240 to confirm that. So yeah, reinforce the other exits for sure. So the other exits would potentially be so a change in trend would obviously would be an exit, even if it's from uptrend to congestion, would take us out. The Hawkeye stop, which is the crosses, and the Hawkeye crash barrier, which is any intra period touch of the crash barrier, we would take it off the table. So the way that often works in terms of setting it on your system is we would set it at the crash barrier. We'd set a stop at the crash barrier for anything we're trading, and then obviously if we're live we can make a judgment in terms of whether the Hawkeye, whether it's close below the Hawkeye stop or not. So if you were trading a longer time frame and want to walk away and have a life, then you could do. So let's just have a look at AUD USD and see what's happening. Apologies, it's taking a little time to cook. Okay. Yeah, again, not much happening on those time frames on the. Let's just change that to 15 minutes. Apologies. Not much Australian dollars in congestion. versus the USD. So we will be looking at other pairings now. Again, on a future session, we'll go over the Fatman, which is a way of identifying which pairings are good to go. We've probably covered a reasonable amount of ground today, and I really felt it was important that we spent some time talking about exits. Michael, that sounds a great way of using it, and good to hear you're having some success. Always a good thing to hear. And look, just to reinforce this, I mean, obviously, one of the things that Nigel smacked me around the head a bit about when we first got together, he said, look, there are two levels here of learning Hawkeye. There's how to use Hawkeye, and then there's how to drive it. So my aim for you as a teacher is to give you the tools to put you in the right place, so then you can start to test things properly yourself and work out what your own groove is. It's any session, doesn't matter whether it's me or Nigel or anybody else from anywhere. Really the bottom line aim, if you really want to be successful in this game, you're not going to be successful just by tracking somebody else. The purpose of tracking what somebody else does or what experiences somebody else shares with you is really to put you in a place of confidence that you've got a system that does start to turn over some results for you, so then you can find your own groove. You can find out what really works for you as a trader. So obviously the Hawkeye suite of indicators is vast and suits all levels of instruments. And look, just to give you an example, for options trading, we use the trend dot or the ATR as our exits. You don't use the Hawkeye stop. That's an own groove thing. The wide bar, using the wide bar for credit spreads, is an own groove thing, which some people have taken on and taken to the next level. Integrating the pivots into your system, I would say is wise, but again is finding your own groove in terms of how you would actually use that. Perhaps you might like to trade a continuation of a trend if it breaks a previous high. Again, that's finding your own groove. And then you can obviously adjust settings on Hawkeye to suit your particular style of trading. I know Nigel favours slightly longer time frames than many people who initially trade Forex and go for 5-minute charts and 15-minute charts. As standard, many of the experienced FX and intraday traders on futures would tend to go slightly longer time frames, and they're very quick. But that's not to say that money can't be made trading shorter time frames. It just means that you need to make sure that groove fits you as a particular trader. One other little thing I would say, again from experience, and one thing I've seen time and time again and on a one-on-one basis, is if you are going to test a new indicator or a new way of using an indicator, then make sure you're just changing one thing at a time, and then you can actually see the difference it makes. Back testing, again, one of the little soapbox things of mine is people changing systems on back testing is lunacy. The purpose of back testing, and again, make a note of this if you think it might be useful, the purpose of back testing is to decide whether a forward test is worthwhile or not. So that's the evidence you need to say, hey, look, this is worth further investigation, and then you test it in real time. So there's just a couple of little tips that I hope might help you along the way, and that's probably you've probably heard just about enough of me, I think, for today. I trust that's been useful. Thanks, George. I really appreciate it. Michael, I'd love to hear how you go with that. That'd be really interesting. But logically, I think that sounds perfectly reasonable. Okay, guys. Well, look. Let's just flick back to. Let's try and flick back to the There we go. I think we've answered all your questions, but you've got my email address, and myself or any of the team is always happy to help whenever we can. Pop me a line if you're interested in, if you're not using Hawkeye now and would like some more information on that, just drop me a line to mike@hawkeyeoptions.com and I'll make sure some information gets through to you so you can make a decision. If you've not experienced Hawkeye at all, try the volume module for the $97. That might be worth just having a look at, just to get a feel. And of course, feel free to rock up again next week, come armed with your questions, and by all means put me an email or two through before if you get a chance to. If you were late today, delighted you could make it anyway, and as I said, it's recorded, so feel free to catch up. And look, it's your attention. Thank you for your participation. It always makes it great for me if people participate in a session like this. It's a very strange, if you're a live teacher like I am, primarily, it's often very strange to be doing it like this. And so knowing that you're there and knowing that you're engaged is fantastic. So thank you very much indeed for that. And finally, of course, trade safe, learn with passion, because it always makes a difference. And usually the indicators are not like indicators, because that is what works. So my name is Mike Smith. Take care. I'll talk to you again soon. Bye-bye for now. Very welcome, guys. Thank you, Michael. Cheers, Bill. Thank you, William. You're very welcome, mate. Cheers, Richard. Okay, see you guys. Bye-bye.